Good afternoon, traders. Happy Monday, September 29th. This is Melissa with Price Plan Profit, and I'm going to go through my trades for today, starting with the SPX chart. First off, we woke up to a nice, beautiful surprise. The ES futures were up about 30 points when I sat down at the chart, so I was looking for a nice gap up day. Now, the rectangle, the cyan rectangle up here is the PMZ. If you don't know how to trade this, I will link a video above so that you can learn how I trade the pre-market zone. This is a proprietary indicator that my trading partner Trendy John developed a decade ago, and I use it every single day to trade. So encourage you, if you're looking for the perfect day trade indicator. It's not perfect. It doesn't work 100% of the time, but it's pretty perfect for me because I have been profitable using it over the last 3.5 years. All right. So as price opened today, I knew that price was below the PMZ and also that there was immediate resistance above the pre-market zone on ES, the ES futures, which is what I use to consider where the SPX PMZ is. So I knew there was immediate resistance above, which told me that if I were to go long above the PMZ, I better be prepared to take quick profits. Well, price never got up and above the PMZ. You can see all day we traded below the PMZ. That made my bias to the downside. So when we popped up here into the PMZ here, this was a short the rip opportunity back down. And the way that I found a target to the downside this morning was by measuring the Fibonacci's from Friday's close to the highs on the day, and the 236 and the 38.2 were first two targets below the PMZ there. Once we were below the PMZ and price got below the trendy cloud, I then ran Fibonacci's and I kept adjusting these as we made lower lows on the day. So the first time that I put these fibs on was 11:36 Eastern time, and I was looking because my bias was to the downside with price below the PMZ and below the 5-minute cloud. I was looking for trades out of this bear channel, the 236 to the 38.2. I actually had 3 trades here to the downside out of this sell zone. One was risking 2 points to make 3.5, and the other two were risking 2 points to make 4 points. I was only trading one contract there, and all of them were winners. Up next, I was watching price 3 trades out of that bear channel. I figured I'd better stop while I was ahead, but I wanted to know where exactly price could be going below that bear channel if price continued to drop. So you'll notice I had a target here at the 76.4, the imposter level, and then another target down here at the 887 by the closing price on Friday. That's where I got these levels for trims below the 618 of the move from Friday to the high today. That 618 was the first target. Then I was looking for 764 and then 887. Nice trade right here down to that 887. But once we got to the 887, which was my target to the downside, I then shifted my focus to play a relief bounce back up to the bear channel. So I'm going to take off these levels here because the bear channel will change as we made lower lows on the day. So let me adjust the Fibonacci levels here down to the low because this is a trade that I got into. Because it was later in the day, the premiums were less on SPX, allowing me to trade two contracts instead of one. My profit targets for these two contracts. I was risking 2 points once we made a higher low and got a breakout candle. I was risking 2 points to my first target, the cloud right here, which was a 3 point reward. And then my next target was back up into the bear channel now. What is the bear channel now? And the 618 that I've had on my chart all day. So you can see I've risked 2 points on one of those contracts for 3 points. And then on that second contract, I was trail stopped out right here on this wick down for 7 points. Once I got to this part of the day, right about 2 o'clock in the afternoon, I decided I had met my profit goal for the day. And so I was going to leave SPX alone, which is what I did. We had another short opportunity I can see from up here, either the bear channel or the bearish golden pocket. That was a lower high followed by a breakdown candle. It would have hit at least one target, if not two. And then we had another good looking trade to the upside once we made those higher lows, followed by a breakout candle that would have paid also nicely to the upside. So I missed a couple of trades by cutting myself off, but that's all right. I didn't want to mess around with the end of the day and risk giving back profit. So that was a decision that I made. Up next, I started a trade in Barrick Gold. Gold miners, all of the above has been very bullish, and Barrick Gold actually had a pullback today to the daily 9 EMA, this EMA cloud right here. So I started a position. It doesn't expire until December. Just half my allocation here with plans to add into this buy zone. This is a golden pocket measuring fibs, and it's where I'm looking to add to my position. So right around 32.22, 31.32. A stop is a daily candle close below 30.15. You can see the daily 21 is lining up in there, and these are key Fibonacci levels that I enjoy trading off of. So just a starter position in Barrick. I bought the $30 calls expiring on the December monthly expiration. As far as targets to the upside go, 35.76, 37.49, and then 38.47 by $40.80 is my trade plan for Barrick. I also started a position in Google. Now I am taking some heat in Google. It started off the day strong, price above the PMZ. It was looking good. The NASDAQ was looking good at the time, and I started a position using the PMZ that immediately went against me on this big candle here down. I did add to it at the weekly edge mid up here, and I have about 3/4 of allocation left to add to the position, but I plan to use the PMZ tomorrow and possibly Wednesday to trade around this trade and the heat that I have taken so far. My goal will be to get price back up to break even before hopefully Google turns around and comes into 247.66 by 248.93 would be a trim, and then 250.21 by 251.15 is my second trim, and I'm targeting 251.85 by 256. So that's my trade plan for Google. I want to see higher lows inside of this buy zone. If I'm just day trading the remainder portion of my allocation, then I will use the PMZ tomorrow and Wednesday to day trade that above the PMZ going long and trimming at those intraday levels. So if you're not a part already of the Trendy Room, be sure that you check out the description of this video. I'll have a link in there that you can join me and John as we trade live every single day at Simpler Trading in the Trendy Trading Room. Not only do we alert our trades, but we are also there to help, educate, and share ideas with the most awesome community of traders out there. So hopefully you will join us in the Trendy Room. Again, the link will be in the description below, but you will find out what I do with this Google position that I'm taking some heat on. I did not get out of the position because price did come into this beautiful inside candle followed by an up candle there. So I decided to carry the risk over. I only have two positions on in my account right now, and that is Barrick Gold and Google as far as shorter term swing trading goes. Now I have a lot of equity positions on in my long-term account, but as far as swing trading goes, these are the only two trades that I have on. So I am perfectly comfortable going to sleep tonight knowing that I have this risk out in the market. And you know that is so very important to me that I'm always trading with a risk amount that I am comfortable with going to zero if the unforeseen happens. So overall, good trading day. Made very nice profits in SPX on those four trades. Taken some heat on Google, and my Barrick Gold position is flat. Hopefully, I will get a chance to add to that position. So I'm actually hoping I get to take a little heat in Barrick Gold. Then I will add to it on confirmation in that buy zone. All right, I hope you all had an awesome day of trading as well, and I look forward to seeing you in the next video.